Good morning, everybody, and welcome to SFI Live. I hope everyone's well on this very brisk morning. I'm joined today with the usual. We have Mr. Tony Hall. Tony, say hi.
Morning, everybody.
And Holly, who everybody knows you've been with us before. Holly, say hello.
Morning.
And we have a new face, Miss Deborah Tedder. I'll get it right this time. has joined us for the first time, and we'll explain why Deborah is here a little bit later on. But we'll go around and do quick introductions. Tony, go on, give us your usual introduction for those of us that don't know who you are.
Yeah, hi everybody. I'm Tony Hall. I'm head of mortgage sales here at Saffron. I've been now with the Saffron for 18 months, but I know you won't all believe it, but I have 34 years now in financial services experience. Doesn't look it, I know, but all right. Thanks, Deb.
Yeah, it does look it.
Yeah, we believe you. No, so over to Holly. Holly, just as she takes a sip.
I'm sorry, I should know this by now. I've done enough webinars. Morning, everyone.
I know, but there are some new people, so let's give them a fresh insight to who you are.
Yeah, so I am the intermediary team leader here at Saffron. So I currently look after the telephone BDMs and our business development assistants. And I've been at Saffron for coming up to 6 years, I think. But yeah, that's me.
Wonderful. And someone that few of you probably don't know, actually. Go on, Debs, give us a little introduction to who you are, what you do at Saffron, and a little bit about you, please.
So I am one of the business development managers. I've been at Saffron now for 6 years, but I've been in the financial services industry since about 97. So I started as a broker, but I've been a bank manager, I've been a manager, I've been, you name it, I've done it. So I've done it, been in financial services for a long time. But yeah, I've been at Saffron now for 6 years in May.
Amazing. Welcome, everybody. And welcome to the audience as well. For those of you who haven't joined us before, we are completely interactive. So we're looking for your questions. In the initial part, we'll be taking questions on later life lending. We'll be discussing later life lending, which is the first half of the webinar. And for the second half is our criteria and case clinic. So if you've got a case that you're currently working on, perhaps not comfortable with the response you've had from lenders, and see if Saffron might be able to help you, please omit any personal details. But if you want to put your case into the chat box, then what we'll do roughly around about 11:35, we'll start the case clinic and we'll go through them one by one and give you responses, see if we can help. Anything we can't help with today, we will get in touch with you after the webinar and talk to you directly, which we'll probably hand over to Debs, and we'll explain why a bit later and why Debs is here a bit later. But in the meantime, we are going to be talking about later life lending. So if you could pop your questions into the chat box, we'll get round to those. We have got some preset questions in the meantime. So let's kick it off. I read an article in December that said we need to start educating a bit more on later life lending. Tony will tell you, he got a little bit frustrated with me. Getting my head around Rio was just blowing my mind as somebody who's not in industry. So I know that education is really key. And, having spoken to Tony, Holly over the course of the last couple of years, I've picked it up. So today is more about kind of talking to you about what you don't know. So if there's questions you have, obviously let us know. Tony, I don't believe everyone needs re-educating, certainly not brokers, but later life lending is changing dramatically, isn't it? And it really has changed over recent years. Where are we going? I mean, it's going to continue to change, isn't it?
Yeah, I mean, it's still obviously later life in the context of equity release is one solution. Has been around, for 40 years, a long. I can't work exactly how long, but a long time. It's kind of still in its infancy though within residential markets, as over the last decade lenders have kind of developed their lending policies to support older customers with allowing people to work longer in terms of assessing their income, allowing open-ended end dates on mortgages. So it is developing. It's a huge market that's only going one way. We're all growing, we're all living longer, and therefore require houses of various different types and different sizes at different parts of our career and our futures. We are also looking at how we use that housing asset more going forwards, and I think that's one of the key things. I'm sure we'll talk about later, but there is still a stigma about borrowing later in life, and that is one that really does needs to change. But it's kind of years of doctrine of getting rid of your mortgage as soon as you can, as opposed to actually utilizing that huge asset that you've got in order to supplement what you want to happen in life, be it your own well-being or looking after the next generation, etc., etc. So that's what's kind of moving the market. And there used to be residential and equity release and a big gap. There's now quite a small gap, which REA has helped to bridge. I'm probably answering about 20 questions here in one go, so I'll shut up and move on. But yeah, it is a market that is going to continue to grow because the demands for the consumers are going to grow with it. Because, as I said, people are living longer and have, different aspirations now than they used to have. So a bit of a waffle there, but hopefully that starts the.
We kind of queued up quite a lot of the questions, as you said, actually, but I'm not going to go through all those questions straight away. We'll just pick up on something you did just say. We are an aging population. We are working later. I mean, my retirement age, I'm right now, 43. I forget how old I am. 43. So my retirement age at the moment is 67, according to the government website. I looked yesterday. So, yeah, we are going to be expected to work later and later. And so, Gen Z millennials probably might be working closer to 80 than 60. It's a crazy time. But what does that mean for people when they're borrowing with the retirement age moving later and later? Does that mean they can borrow less, or that it's more restrictive?
Well, it's all a question of affordability. As I said, you've got Rio now, which is, there isn't an end date. That mortgage continues as long as, you have to service the interest on it until you no longer need it, i.e. you've sadly died, or you've moved into long-term care, and therefore then the asset is sold. So, it's all about affordability, really. And what's helped, used to be formulaic. Lenders would say, retirement age max 67 or 65, and then we can't use your income, or we'd switch to your retirement income, which is generally going to be a lot less and therefore impacts your affordability. Where we've moved now, and particularly, well, it's kind of mainstream, but particularly specialist lenders have started that journey of moving out. Right, we'll take income to 75, we'll take income to 80, earned income, and then we'll start using your pension income. So that's where it's moved on to support this working later. And a lot of people are in retirement now, going back to work to supplement their, one of the largest increases in self-employment, I think, in the last 5 years has been retired people going back to work because they've realized they didn't have the lifestyle they wanted and therefore need to earn money to do that. So I think that's what's changing. I think going back to that stigma thing, and it very much I'm 51, and the last generation really is of actually it's still ingrained in me to get rid of my mortgage as soon as I can. That seems to be the way. But we're moving to that generation now that will probably never pay their mortgage off, because you don't have to, because there are so many ways of continuing with your mortgage as you go through your lifespan, and the stigma of having debt is going, if that makes sense. So I think that's kind of what's changing.
So this article, I'll keep harping back to it because I was doing my research and a few things jumped out at me. And one of the things that the guy, forgive me, I don't remember who he was, said that late life lending need a rebrand. Now, I don't understand it, because late life lending to me doesn't sound like it's restrictive. You're saying retirement lending, you're then going, well, I'm not retiring, I'm not retired yet, don't know when I'm going to retire. So is it what they were getting at was to re-excite and engage people, as you were just saying, to kind of strip away that stigma of I'm borrowing in my 60s or whatever. How could we, or how could the industry, not we specifically, but how could the industry evolve that to make it more appealing, as you say, to not have to pay off your mortgage, to know that you are going to remain in mortgage in later life?
I think that move is coming because people, most first-time buyers are actually taking on, if you look at it, potentially a later life mortgage. Average age of first-time buyers is 34, 35. We do 40-year mortgage terms now, and that average, it's not the formulaic 25. I think it's somewhere in the mid-30s now in terms of years. So those first-time buyers will become later life borrowers at the end of that mortgage anyway. So we're kind of in that camp already. So I think it's not a rebrand because it's a good descriptor. It is what it is. I mean, well, later life, they say, starts at 50. So I joined that club where I can get Saga insurance, but I don't feel 50. You know, 50 is the new 30. Well, I'm telling myself that anyway. So, or 60 if Holly gets my age correct in the future. So for me, it's the bit of a stigma around that name, but it does what it says. It's a good descriptor. It's more of an education piece to say, look, you know, funny enough, I had my hair cut the other day, and I do still have it cut rather than stuck on. One of the guys there we were talking about occupations, and he got onto the subject mortgages, and he was like, well, I'm 50, I'll never get a mortgage now, because that's the general understanding. And I was like, well, no, you're self-employed. You know, we'll take your income to 75, if not longer, if we could. There's always going to be an option for you, you know. And then you've got equity release, which isn't affordability linked. It's purely linked to the asset and your age. So there is always an option. And I think that's what is becoming more conscious. And, you know, Rio has helped because it now allows mainstream brokers to talk about those later life solutions, whereas with an equity release you need the extra qualification as well, but you don't need that for Rio. So that has opened the doors for education, but far more is needed.
Okay, it's really helpful. Thanks, Tony. Holly, coming to you. Might be worth just talking about what later life offering Saffron has, really, because we've just talked about various different things, or Tony's mentioned very different products. What is available to brokers from Saffron currently?
Yeah, so at the moment, it's not just retirement interest only. So we do offer a range of retirement interest only mortgages, so they can borrow up until the repayment vehicle being death of the applicant or then moving into long-term residential care. But we also do the lending into retirement downsizing. So should they want a termed mortgage rather than a no-term mortgage, then we can offer that too. You know, we've always had great criteria. We've had no maximum age for older borrowers. We base it on ONS statistics for life expectancy. And, you know, we can, as Tony alluded to, we can take working income up until the applicant's 75th birthday. So, you know, the main ranges that you can look at are the retirement interest only, lending into retirement downsizing, but also if they were looking to do an interest only mortgage and they didn't want to use downsizing as the repayment vehicle and they had another suitable repayment vehicle, they could just look at our standard residential range. So there's a lot of different options that we have. It isn't just sort of limited to you can only look at Rio and that's the only option. It just depends on what they're looking to do. You know, and we can sort of guide you and say, yeah, you might be better off with this product or just help you along the way, really.
Okay. We've got a question from David, just because you mentioned Rio, to spark something in his head, I think. Do you see Rio being based on the affordability of the interest-only element as opposed to the repayment basis?
Yeah, so I mean, for retirement interest only, our affordability is worked out based on interest only rather than repayment. And what we do is we work out the affordability based if, for example, it's a joint application, we work out affordability individually, and we will take into account what the other applicant would receive in the unfortunate event of death of the other applicant. So if they were to receive 50% of their pension, we can use that for the affordability calculation. So it is interest only based. But we can look at various different incomes to help support affordability.
Fabulous. Just on that, actually, while we talk about that, it's called retirement interest only. What does retirement mean? So they have to be retired?
Yes. So for our retirement interest only, they must be retired. But for our lending into retirement downsizing product, then they can be no more than 5 years from their retirement date. So, but we know across the market, it does vary with Rio lenders. Some allow them to still be working. Some allow them to be, they have to be retired. It is something that's in review with us at the moment. But it would be, at the moment, they definitely have to be retired to be eligible for the Rio product.
Dave, it's coming to you as a BDM. You deal with brokers all the time. So have you seen an increase in later life lending queries? I mean, we've alluded to this quite a lot already, that we're an aging population. Are you seeing, I mean, you've been in the industry a long time, are you seeing that increase?
Definitely. I think the increases certainly came when the high street began to pull their products to lending into retirement applicants. So when you think about a typical high street lender that said, we no longer want to lend to those that are retired, particularly if they're on the interest only side, we started to get a lot of inquiries at that point. So going back 2, 3, 4 years ago. So that's when we started to develop our range of retired products. So we had the Rio range that we brought out, but we never had the downsizing product. So we didn't launch the downsizing product until a couple of years ago. And we did that particularly because we wanted to bring a product to market specifically for those applicants that we weren't able to use a sale and downsize repayment vehicle for. So because we're not an equity release lender, we weren't able to say to applicants that you can use your residential home as a repayment vehicle. We brought out the downsizing product because we had so many applicants that had a large amount of equity in their property. And we wanted to say, look, we want to help those applicants. How can we do it? So as long as they met a certain set of criteria, so as Holly said, they're retired or within 5 years of retirement, they've got an amount of equity that we can use, we brought to market the specific downsizing product. We're able to then help an awful amount of clients that can say, look, to brokers, if you've got an applicant that the high street can't help, we can help them. We're more than happy to help them. The BDM team are able to guide brokers in a way to say, when a call comes through, I've got a client that wants to talk about Rio. Will guide us to say, do you really want to talk about Rio, or are you simply talking about lending into retirement? Because they are completely different things. So the BDM won't just say, okay, then I'll talk to you about Rio. It's okay, do you really want to talk about Rio, or are you really talking about a client who is retired that wants to talk about a mortgage in retirement? So there are certain questions. So what are you looking to do? What does your client want to do? Do they want a termed mortgage? Do they want a non-term mortgage? But we have seen more inquiries, definitely. And it's our job to try and help wherever we possibly can, and do what we can. And what the team will do, if it's a case that we think we can help with, we will guide the broker and give them information about how to help that case go through, what notes to add to the DIP to really push it through, give the underwriters everything they can do to help that case, so that the underwriters are aware what that case is about as well. So we don't just let the broker go away and say, okay, then this case might be one for us. We'll do what we can to help push that case through as well.
Great stuff. Tony, that queued you up quite nicely, actually. We're talking about the underwriters. Common sense lending. I know we're promised to say that every time, but it's something we need to bring up here.
Yeah, again, it's true. We have policy rules, but we also have discretion, and we also have exceptions. So what I would say is, it's always about, and the beauty of our approach with getting an experienced underwriter to look at every case. We get the cases to them fast using technology, but the human makes a decision, and that allows us to think around the edges when you've got a case that doesn't necessarily massively fit that policy. So it is literally common sense. And again, as we always say, tell us the story. We have a notes function on our decision in principle that you can tell us why this case does fit, doesn't fit, why it's brilliant, why it isn't, whatever, but tell us, and then we can make that decision. So yeah, that's really important for us. It's what we do. It's the human makes the decision, and they're experienced enough to make the right decision as well.
I think that's really important. And also, again, cues up for another thing. We will give you these details at the end of the webinar again, but it's all about signing up, getting yourself onto there, have a look at the supporting documentation that's available, all these kind of things. So if you aren't signed up for Saffron for Intermediaries already, I will say it now, but we'll repeat it at the end of the webinar. Saffron for Intermediaries.co.uk. But we will give it again at the end. Just a reminder, at the end of this, you will get your CPD certificates directly to your computer through this platform. So stay with us, because I will be giving those out at the end. I forgot to mention that earlier. Okay, so get on, sign up is the next message. Yeah, let's just talk about Rio for a second, Holly, because you've just done a little bit of an update internally. So can we talk about the criteria, a little bit about the product, just give the brokers something to kind of give them an idea. Before we do that, sorry, I've missed Joe out. Joe's put a question. Holly, have you seen that question? Can you look at LP policy utilization 85 as repayment vehicle for spouse where income won't work?
Not. Can we take that whole?
Yes.
Wow, in 2 years.
Oh
He's taking
gosh,
all the money.
yeah, of course.
As it's your last SFI for a while, why not? I'll chuck one in for you.
Oh.
Throw
He's
you a
going to
bone.
show he knows
So-
everything now. He's proving himself.
Well,
Holly's having a
I'll
great.
correct him after. But
Yeah, Joe,
let
I
him try.
will do my best to answer this for you, but Holly or Debbie may roll their eyes in the background. So unfortunately, at the moment, no, we can't use a level term life policy as a repayment vehicle. It is something that we are reviewing because we have had that feedback previously, because we know how difficult the death stress and affordability can be. So we can't do it now, but it is under review. With obviously, as soon as we know any more, we will let you know. Is that right, girls?
Yes, that's correct.
Yeah.
I'm going to mark this time and date in my calendar.
Date.
The moment he took a criteria policy question from Holly. Love that. Right, so I've thrown myself off now. I was all prepared for the next question, not what it was.
It's a good question, Joe, because it has it. Yeah.
Yeah,
Very
you
good
really thrown him
question
off.
on
I'll
that
go
one.
back to that was really good. Thanks, Joe. So Holly, back to what I originally said. Let's talk about Rio and the changes, the criteria, and what brokers really need to know about the product, so we can push that product. We'll move on to the others in a sec.
Yeah, so with the retirement interest only mortgage, as I mentioned earlier, that they must be retired. The minimum age is 55 for both of the applicants. And as I mentioned, there is no maximum term. So if you were to key it into our system, you would just put a 40-year term in order to get it through. The repayment vehicle is death of the last occupant or then moving into long-term residential care. There is two types of products. So there is your standard retirement interest only product, but there is also a product where if you have a power of attorney in place to protect you later down the line, should you need that, then that gives you a cheaper rate ever so slightly on the mortgage. But yes, affordability is worked out for each person on their own, and then it just depends on what type of income as to what we can take. So pensions, private and state, we can take 100% of, but then say, for example, it's a self-invested personal pension, so a SIP, then you could be looking at, we'd only take a percentage. But what we would do is just to give the BDM team a call and we can run through and let you know kind of what percentage of income that we can take. The criteria are on the website. If you do look under the lending into retirement or in interest only, you'll find our lending into retirement policy. I will link it in the chat as well, so everybody does have that. And that kind of explains the different types of retirement income that we can take as well.
Lovely. Is there a calculator on the website as well, Holly?
Yes, there is. So if you go to the calculators tab, go to the standard affordability calculator, and when it says the very first question, does this go into retirement, you click yes, and then that works it through as a lending into retirement calculation.
That's ticked off one of our other things we're going to mention at the end. But yeah, I thought I'd dug that in because it was a good time for that to go in. Anything you want to add to that, Tony or Debs? I think Holly just covers everything so well, so I don't think there's much more to say on that.
No, that was spot on.
Yeah, spot. The only thing that I will say is we do our best to support customers who want a Rio, but a lot of the time the affordability does make it difficult with the removal of, one of the earners instantly. So what we do find is, though, because of our, lending into retirement downsizing product or our other products with interest only, where we can do a term linked to an ONS mortality statistic, that we can actually help them anyway. It just might be a term product rather than an open-ended Rio. So I would say never, if you get that decline from us, then don't give up, because there's a strong chance we can help you anyway. It just might be over a term rather than an unended term.
Thanks, Flo.
What I'd also say as well is that if you are going to do a dip for any lending into retirement case, it's automatically going to refer. Don't be afraid of that. It's not that you've done anything wrong. It's because the system is set to do that. And it's because all the dips have to be manually looked at by the underwriters. So don't think that if you do a dip and you've got a refer code that you've done something wrong as a broker. You haven't. It's an automatic set of the system. So don't be afraid. Don't think, oh, what have I done? You haven't done anything. It's just set that way. But if you have any worries or concerns, or you want to talk through any lending into retirement case, just give us a call and we'll happily talk it through with you.
Useful tip. Thanks, Debs. That's really good. Okay, so just you all kind of reacted to this question when I put it to you, so I'm going to put it to you anyway, because I'd explained the question a bit, because I think my question was perhaps not how it should be. Reading the article, one of the things that came out was that later life borrowing isn't necessarily a spur of the moment thing. So a case isn't going to come into a broker overnight. They're going to have to have thought about it, looked at their finances, looked at things they need to do with their equity release or whatever it is. So my question is, what can we do as lenders? What can brokers do as brokers to make sure that the clients are going to come forward are educated enough? What do they need to know? And I think we're covering it. I think it's just going to be more of a summary of what we've just done. But what can we do to help those clients that maybe are 58 to 60, looking, going, do you know what, in about 5 years' time, I'm going to be retired, and actually I might need a little support. I might need to do this, I might need to do that. So what can we do to help those clients coming forward? I'm going to leave it open to whoever comes first.
There we go, girls. I'll take this one again if you like for now. As it's not directly linked to our criteria, I'll have a bash. So the key for me is education again, and education to consumers about go and seek professional help, from a financial advisor and a mortgage advisor. The key is, you're quite right. What the article is saying and what's out there is that the lending becomes part of a solution to a problem that manifests itself later on, rather than being used as a holistic approach to retirement planning. So people think about retirement planning, it's instantly pension and how do I invest? Well, actually, your house is largely your biggest asset and probably the biggest thing you've got, behind you. So how do I start to use my house as my retirement planning? How do I release that equity? What do I need to do to, I've worked hard and built up all this equity in my house. How do I release that in the best possible way? So I think it's about, this isn't a new thing. This has been around for a few years, about this holistic approach to a financial advice, and particularly using a housing asset in that equation. I think that will start the conversation earlier than it is at the moment. As quite rightly, it's a symptom of a problem and it's one solution, as opposed to actually there's a broader set of things, and doing something with your house is part of that solution. So it's going to happen at some point. It's not an urgent thing, an emergency. It's part of my planning. So I would always recommend that you go and seek, financial support, financial advice from a quality mortgage broker, etc., who can give you that wider picture, or at least refer you to somebody else that they trust and know that can help you with that wider. So that's my biggest thing. It's about education.
I think education is key generally, isn't it? I think part of the reason we do this is to help to educate brokers on at least the products and the criteria changes and things we're doing, and maybe spark something in a broker's head, or fuel them for a future client. But I mean, yeah. I agree.
I think, sorry, Jay, one other thing is a plea to intermediaries to don't be scared by this. There's a whole raft of opportunities and a whole raft of lenders. There will pretty much always be a solution for your client. So don't shy away from taking on that challenge from a client that needs your help, because there's always a solution. And as Deb said, ring us. If we can't do it, we'll tell you. But what we will do is try and help you find out where you can do it, because my guys understand the market. They know what other lenders do, and we'll point you in the right direction if we can't do it. It's all part of the service.
Well, listen to that. So all the more reason to get in touch. Thanks, Tony. Just something personal for not being in your industry. Obviously, I'm an independent, so I fly by the seat of my pants a lot of the time. But I remember when I was growing up, you bought a house to pass on to your children. That the mindset of, I'm going to be mortgage free by the time I'm 55, and right, and you give this. There was a time when this would happen, but nowadays, very, very unlikely. We're going to move on to a very hot topic in a minute, but those days are gone. So actually the stigma really about borrowing into later life, I mean, I'm opening this up to everybody, should really bring on with that, because it was always, the paid off house would go to the children. Maybe they would sell it, split the profits, once the inheritance tax is taken off, which again, even more. a higher percentage. But, you know, this was the view. Is that completely changing now? Is that what we've got to look at, is drop that, you know, feeling we've had since like the 60s, 70s, 80s, all the way through, to now go, that's not how we retire anymore?
I do think so in a way. You know, there's still the sort of the bank of mum and dad, but we do a lot of, you know, a lot of our lending into retirement queries now are actually helping. They want to help their children now whilst they're still alive. So, you know, they want to help them purchase their first home. You know, first time buyers are now getting older and older every single year because that's what they can afford. I think Tony, you said it was around sort of average age of in their 30s that they're purchasing their first home. So parents want to release equity to be able to help. They also want to be able to look at things like, you know, we can help with home. They want to do some home improvements, or they want to release some funds so they've got it there for, you know, a holiday or a car and that kind of thing. So there's all different reasons of why people are looking at those further borrowing. It's not just solely focused on, you know, what's going to happen after they pass away. They're thinking, what can we do here and now? You know, it's been a stressful 3 years for many people with the pandemic. So a lot of people are thinking, well, how can I treat myself? I can release a bit of equity out of my house, go on holiday, help my children now whilst I'm here, and go from there. So yeah, there's a lot of different things that I think the mindset is changing.
If I look at my friends' parents, my parents sadly are no longer with us, but look at my friends' parents 20 years ago as a 20-something, I would have looked at them and they would have been sat at home with the pipe slippers, you know, enjoying retirement, gardening, that kind of thing. That's not retirement anymore. I mean, my friends' parents are gallivanting in jump planes. You know, as you were just saying, Holly, they're enjoying their lives, because it's not just that we're getting older, but we're staying healthier. So I agree with that. And it's quite nice to hear that they're releasing it for good purposes, which is, you know, what we want to do, which leads on really well to this very hot topic that's going to lead on to quite a lot of conversation. Guys, just a reminder, your cases or any criteria questions, pop them in. We haven't had any yet. We will be going over to those in about just a few minutes' time. When I start the next topic, this is going to lead into a whole different conversation. So pop your questions in the chat box. We will get around to them. I will stop talking and jump onto a question if it's something we can answer immediately. So pop them in the chat box, get them in, especially cases. We really like cases that we might be able to help with, so do pop them in. So here we go. The buzzword of the week, or actually the month, and probably will be for the next decade. Cost of living crisis. We're all facing it. We work in a building society. We work in savings. We know people have money is dissipating. We know life is hard. We know it's going to get even harder. So I want to talk about this from a varying different perspective. But one thing that I really wanted to bring up while we're talking about later life lending is the impact on older people who have much less of an income, on a pension income. They're going to start struggling. I'm presuming, but I welcome all your opinions on this. This will see an increase in later life lending queries. Do we agree?
Yeah, I think so. I mean, again, it's yeah. I hope it does, because people, you know, older people are sat on a huge asset, which they're, you know, generally again struggling to keep up and heat and everything else, and having a miserable existence, and they don't need to be. They could release up some cash to get the house energy efficient and save the bills, and you know, if they do it through a residential route, then you know they've got to service the interest. But if they want to go down an equity release route, which has got the options of servicing the interest, or actually it rolls up and they don't have to pay that money back, you know. And a lot of the concern for older people is on borrowing money, and it's kind of trying to break that understanding. If you're not borrowing money, you're just releasing what is yours. All you're taking is your hard-earned cash out of a property that you've loved and cared for, and there is a charge for doing that, but you're not borrowing money, you're just releasing your own money. So I think that will help people understand that. But I think, yeah, there are ways to save on energy bills, and that could be through increasing the EPC rating of your property. So there are ways, you know, to raise funds to do that. Or our products like downsizing. So downsizing at some point in the future when you want to, and we're saying that's fine. We'll use that as a repayment vehicle to service the interest until that day. So yeah, I hope that, as you say, I think cost of living is, you know, and one impact it's going to have is on the affordability of mortgages, because as affordability models develop, and they'll take into account the new costs of living. So it's going to get a bit of more of a squeeze to afford a mortgage. And it is something that we look at regularly to see that impact. So I think there is going to be an impact. But again, I go back to that point I made to the geezer in the barbers. There is always an option. Go and seek help. Go and find a qualified advisor, a broker. They will help you.
I was quite surprised, Tony. I don't know if you've read this before, that it's actually 74.5% of people in retirement are living on pensions alone. So, and that being state pensions predominantly. So we all know the state pension is not high. So I think that's really good advice. And I think something you said there, Tony, that I really found interesting, actually, a really nice way of phrasing it was, you are basically accessing your own hard-earned money. I think that's, it's not a stigma. You're not borrowing per se. You're not going to a loan shark and pulling out a loan out of desperation. You've paid that mortgage. So no, really nice tip that. And again, when we say about things that we can do to educate. Let's stay on cost of living. So carry on this. Please get your case questions in. We are waiting for them. We will get to them, but we have got plenty to talk about in this one. So on cost of living, let's talk about first-time buyers, because the cost of living going up includes rising rents, which means the chances of saving deposit next to none. They might be better off on the mortgage if they can get through affordability. Debs, I'm chucking it at you. What do you offer? Let's talk, first of all, let's talk about gifted deposits. So Saffron has the best policy on gifted deposits, I think, in the industry. So why don't you tell us all about it? Who do you accept them from, and on what products?
Well, we can take certainly gifted deposits we can take with no issues at all from immediate family members. So we're more than happy as long as we can get a gifted deposit letter signed. It means that it helps anybody, not just first-time buyers. So we can take a gifted deposit letter, gifted deposit, including gifted equity as well. So if you've got somebody that wants to gift their equity, they've got a house, for example, that they want to do the gifted equity to. The other thing that we're also doing is we can take builder incentives at 5%. So we never used to. We changed our policy on this fairly recently. So if you've got somebody who wants to buy a new build property and they want to buy at 95% loan to value on a new build property, say a new build house, as long as the builder is paying no more than 5% incentive, and as long as the person buying the house is putting down at least a 5% deposit, then we can consider that as well. But certainly gifted deposits we are more than happy to take. We can also consider as well taking a loan as a deposit. So if somebody hasn't got their own savings, then we can consider taking a personal loan as a deposit. So there's many ways that we will try and help people, particularly first-time buyers trying to get onto the ladder. The main thing, like always, if you're not sure, then call us and we'll happily talk it through. What we try and do is look at the whole situation that the client's in and try and give guidance to the broker as the best way to present the case to the underwriters. But it's all about whether it's the right thing for the client. With a personal loan as a deposit, you need to make sure it's affordable to include that loan payment. That's what the underwriters are going to be looking for. With a gifted deposit, it's where it's coming from, making sure that it's a trackable deposit. That's all we're going to be looking for, making sure it's coming from the right person. But certainly, do appreciate that in these moments and these times at the moment, what we're currently living in, we need to get the first-time buyers to get onto the housing ladder the best possible way for them, particularly if they're currently paying high rents and they don't want to be doing that.
And with national insurance going up, every single one of us that works is going to get a little slap in the face as well, as long as our energy bills. We're in for a shocking April, so hopefully there'll be a typical government U-turn before then. Let's hope so. We can only pray. Okay, so you've got some questions in. I'm going to go to those and I'll come back to the cost of living crisis in a minute. So Mark has asked, read the downsizing product. Is there a minimum equity requirement and does this vary per region?
So we do have a minimum equity requirement of 250,000. However, we can consider lower equity within the property, but you do have to provide 3 examples of properties in the local area that you would move into. So you could look at Rightmove just to see sort of what has recently been transacted on or is available within that you would downsize to. So we do take sort of, that's where our underwriting and approach really comes in. because we can take a view. We understand that, you know, there's a lot of properties throughout that don't hold that equity, or, you know, or are not even at to that value. So it's just providing us with 3 examples of where the applicant would look to move into once they downsize.
There we go. Thanks, Holly. So, Mark, I hope that answers your question. You got any more on that? Please pop it in the chat box. So, from Philip, do you have product transfers for Rio products when you get to the end of the fixed or discounted rate?
Yeah, I think Philip will. One of the guys will come back to you on that one just to confirm. I think, you know, Rio is still that new that we probably haven't got to that end of maturity for the first time round. So I'll just confirm that. We'll confirm that to you. But they will be offered a suitable product anyway, or they can choose from across the range. That's how we currently work. But we'll confirm that.
We will confirm.
Philip,
I'll come back.
Yeah, Philip, we've got your details already, so don't post anything in the chat box. So fine, we've got your details. Debs will come back to you and answer that question to you directly. Wonderful. Going back to cost of living crisis, it's my favourite subject at the moment. Let's just talk about Saffron's assistance in general. So, Tony, we brought this up on a recent podcast, which if anybody would like to find it, it's on Spotify, Apple Podcasts, and Google Podcasts. Quick plug, SFI Not So Live every month. Tony, we mentioned that you are doing more to help people, but we were talking about the fact that people get in a bit of difficulty. So if the brokers have got clients that have got products with you, we are looking after those that you know get into difficulty. But just from the broker's perspective, if someone was to query with them and say, I'm struggling, I'm having a little bit of a problem, what's your advice to those people that might be struggling with repayments?
Ring us, ring our you know, customer service teams. They will put you in touch with, you know, our trained professionals that can help look at the right approach for you going forwards. The last thing to do is bury your head in the sand, because that's not going to solve anything. You know, if we know about it, we can help. So just reach out and ask for help.
Thanks, Tony. I threw that in because we do get that question thrown at us quite a lot. So that's just, if anybody does come to you, remember that the door's always open and talk. And I think that's pretty much a message we try and get across all the way through. I want to just pick up on the self-employed and contractors on something I read yesterday, that the pinch from businesses means that less contractors are going to be hired, less external support. The self-employed are going to be struggling against, you know, a reduced workload coming out of businesses, because actually what we tend to forget is the businesses get hit by the energy crisis. Not just that, and energy prices, but not just that, they're also paying a premium on the national insurance for everyone that they pay. So all of a sudden, finances and businesses are going to be struggling. So for the self-employed, they can sometimes have a little bit of a difficulty getting a product, but we have really adapted our self-employed and contractor products over the course of the last year. Holly, as you're going to be leaving us after this one for a few months, I'm going to chuck this one at you. Tell them a little bit about what we do for the self-employed, what we do for contractors, why we're different, and why the products are great.
So I'll start with contractors. So we can consider a variety of fixed term or short term contractors, whether they are umbrella contractors, CIS workers, or just day rate contractors. And we've got a really generous stress calculation of the day rate times the day's work times 48. All they need to have is a minimum of 2 years industry experience, but only 3 months contracting experience. And we would want to see an end date on their current contract as well on that one. So we're really flexible with the contract. We're not restricted to a particular industry, so they don't just have to be IT contractors. It can be within any industry, anybody on a contract. And then for our self-employed, we can consider applicants with 1 year of accounts, up to 90% loan to value on the special self-employed range. If they have 3 years or more, they can just go on the standard residential range. Again, that's available up to 95% loan to value. And then one of the changes that we made in October was just to clarify our policy around applicants that have been affected by COVID. So anybody that's self-employed and been impacted by COVID, then we can look to ignore the COVID year and just take based on the previous year, as long as we can see 3 months bank statements of them trading back to the normal levels. So that's proven really popular. And one of the things as well that we do look at is that applicants that have taken a grant, anybody that's taken bounce back loans, we can consider. We just need to see if, the grants, if they've overinflated profits compared to previous years, we may have to deduct. But if it's kept them at a standard good level, then it is something that we can consider further. So we've got loads of options available, both for self-employed and contractor. So yeah. A whistle stop. I felt like I rushed through that one. Sorry, guys.
I just had a breath, so I'll give you a breather for a second. So, guys, we're finishing a little bit early today. Holly doesn't know about this. We're finishing just slightly earlier today than usual. So thanks for your questions. If you've got any additional, please just pop them in the chat box. We do get them even when we're not live. Those questions do come through to me, so I will pass on to the team. So don't be afraid to put any questions in there. If we've sparked any interest from you, pop your questions in and we will get around to them. But we have a little bit of news for those of you that haven't guessed, as Holly doesn't eat all the pies in the office, Holly's quite heavily pregnant, actually, aren't you, Holly? So we have mentioned it. Debs is going to be joining us for the foreseeable, along with the other colleagues that you will have met on SFI Live. So Phil, Simon, Sophie, and all the rest of the team will get involved. But Debs is going to be our go-to for Tony to make sure he doesn't get any criteria or policy details wrong. So she's basically backup and a replace. Sorry, I'm not going to use the word replacement for Holly. She's Holly's sidekick for the time being. So Holly's, are you actually leaving on Friday, Holly? Yeah.
Yeah, so my last day Friday.
Very final SFI Live. So if guys, I can ask you to just turn your cameras and your microphones off for just a second, please.
God.
So what Holly doesn't know is I've been digging around with some of her friends and we've got a little surprise for her. So yeah, I'm just going to turn my camera and mic off and I'll let you guys watch this from some people in the industry.
Holly, just a quick message from me to say a huge congratulations and all the best as you go off on your maternity leave. It's been really wonderful to work with you over the last couple of years at Saffron. I've just been so impressed by your incredible depth of knowledge of mortgage rates. And so I would find that would become especially useful when you're bouncing a baby at 2 a.m. and you can't get the babies to go back to sleep. Just recite the latest interest rates, mortgage changes and conditions as provided by the Saffron. And that'll be a wonderful way to get back to sleep.
Congratulations and best of luck for the future.
Hi Holly, Nathan from 27 Tech here. I've been told that your new arrival is actually due to arrive sooner than expected, so I just wanted to say all the best and good luck with everything to you and the family. Don't worry, Tony will survive and so will Saffron without you, so just relax, enjoy it, and for someone that's actually got a 5-month-old baby at home, the only tip and advice I would actually give you is buy coffee, get plenty of sleep, and most importantly, buy lots and lots of nappies because you will get through plenty. All the best and I'll see you soon.
Holly, I first of all just wanted to thank you for all the help and support you've given me in my first 12 months with the society. I couldn't have got where I've got to without all your help. We're all going to really miss you, and we will try not to break the society while you're away, but we'll try and look after it. I hope you really enjoy your maternity leave, but not too much because we want you back as soon as possible.
Hi Holly, just a little message from me. I know I'm sat right in front of you, but slight change of scenery as you can see. Just wanted to say a massive congratulations and good luck to you. It's been an absolute joy working with you on SFI Live and SFI Not So Live for the last couple of years. I can't wait to have you back. We're going to miss you, but I promise we'll look after it. You look after yourself.
Ray of sunshine for me in terms of your willingness to support and help and really drive forward everything we wanted to do at SFI. So when I heard you're going to be a mummy, I was again so pleased for you, and I wish you all the very best of luck. Do keep in touch, and we can't wait to have you back next year. All the very best.
So there you go. That was a little message from just a few of us, Holly, to say our thanks and our goodbyes, and just little something. There's a few people. I've got a load more. You already know that I've conveniently somehow managed to get your address. So the rest will be burnt onto a DVD and will arrive with you next week. All right. There is a few more.
Thank you so much, but I almost can't cope on that one today, guys. I'm glad the camera was off.
I was going to say, I asked you to turn the camera off for a reason, but don't embarrass her. But no, just from all of us, all the best of luck. We will look after your baby as much as it is ours. So we'll look. I mean, SFI that is. So we'll look after it.
Yeah, hang on.
That's not mine.
No spoilers.
But it's just been an absolute joy, and I know you're only gone for a few months, so enjoy the baby, enjoy your time, and do all the fun bits. And we look forward to seeing pictures and stuff, and then we'll welcome you back as soon as you're ready, not when we're ready. All right, so look forward to seeing you then. And in the meantime, for the sake of the audience, Debs will be with us from next month. She'll be joined by other people from the team. I think, Tony, you're not here next month, are you? Or am I missing on the podcast?
No, I'm going to be off skiing for the next one. So I think Phil and Debs are going to be running the show with you. So that'll be good.
Well, I thank God I've got Phil and Debs, because I have no idea what I'm talking about. Debs, you are literally going to be relying on you next month. That's brilliant. So, guys, thank you for filling out the poll. It's nice to see the response of those that haven't worked with Saffron. So this is a good opportunity for it to chuck out that it's time to sign up. If you guys that haven't worked with Saffron before, if you're not signed up to the portal, now's the time to do it. So, Holly, for your final time before maternity, where can they sign up? Give us a telephone number and an email address as well, if you don't mind, please.
Yep. So you can sign up to register on our website, so saffronforintermediaries.co.uk. Our telephone number is 01799 582 925. And we have literally just changed our email address for the team. So you can contact us via ist@saffronbs.co.uk. All our contact details are on the website. So just get in contact with us. And we also have the live chat function, which is available during working hours. So yeah, you can go on the website and just chat to us if you want to.
Wonderful. And Tony, just over to you for a second. With the sign up, we've done the sign up, we've done the contacts like that and everything else. But also signing up gets you access to the most up-to-date information from Saffron, doesn't it? We don't bombard with emails.
No, yeah. So register is the best way for you to when you're ready to submit a case. You can do it straight away, and then also once we've got you registered and we've got your permission, we can then email you with all our product changes, criteria changes, and updates. It's the best way to stay in touch with us. So yeah, please do. Top right hand corner of the website, click on register, and it's fairly straightforward from there. But if you're stuck, ring the number. The guys will very happily help you through it.
Wonderful. And one from me, blatant plug time again. All of the previous webinars are available on our YouTube channel. We need some subscribers because we can't give it its own name at the moment. So we're a bit limited on subscribers. But if you go onto YouTube and search for SFI Live, you'll find all of our previous webinars. There's loads of them. We've done 2 years of them. So there are loads, various different topics. Not a huge amount has changed, but it will give you an insight. So if you look at anything from first-time buyers to self-employed to self-build, they're all on there. So nip onto there. And for those that don't know, we have a monthly podcast, slightly different to this. And we bring in industry experts, journalists this time. So we've got someone from the FT Advisor coming and joining us for next month. It's released on the 1st of every month. There are 7 currently available. So you can find them on all your favorite platforms. So Spotify, Apple Podcasts, Google Podcasts. You've just got to search for SFI Not So Live because it's not live. We record it. So yeah, have a look, have a listen, see what you think. And if you'd like to join us, we like brokers to be on there too. So if you want to join us, drop us an email. Yep. We'll be delighted to put you on the schedule and see if we can get you in a later date. On that, we talk about mortgage news, property news, all that kind of stuff. We just digest what's been going on in the industry for the month previous and put our little opinions to it and slant on it, I guess. So that's all from us for this month. Holly, thank you. Good luck. And can't wait to see pics. I'm going to get so excited. Can't wait to see pics.
I'll bring him on the screen once he's here.
There you go. I'm sure, and Holly's already threatened us that she's going to be sitting in the audience for every webinar, making sure that Tony doesn't get anything wrong. So if you see a button, that is Holly.
Yeah, definitely.
All the best of luck to you, Holly. And Debs, welcome.
Thank you very
for
much.
having you as SFI Live. We look forward to regularly seeing you over the coming months.
Looking forward to it.
I will get your name right on social media.
You will.
I promise. I will get it right. I can't find you when tagging. So I will get that right. Tony, thank you, as always.
Pleasure.
And we'll go from there. So, guys, don't forget, I'm just sharing your CPD certificates with you now. So if you look on your screen, I've just deleted it. Bear with me. It's going to be one of those days today. I can feel it. So it will come on your screen. So you can download it or go straight onto your computer. So just grab that for your CPDs. So we'll be with you in just a second. Bye now.
Bye now. Bye.
Everybody. Bye.